I've spent many years in the financial world chasing a question that sounds simple but has haunted every investor's lifetime. How can someone like Warren Buffett grow wealth through every era? Bull markets, bear markets, crises, bubbles, inflation, wars, technological disruption, shifting opinions, a constantly changing world, while his philosophy still works almost perfectly? After hundreds of shareholder letters, dozens of interviews, and countless analyses, I found one truth. He isn't just an investor. He's someone who understands human nature so deeply that he can see through all the noise of the market. And if there is anything that helps you survive today's market, a landscape full of volatility, high valuations, mixed signals, and endless noise, it isn't your ability to predict the future. It's your ability to understand yourself, understand the emotions of the crowd, and most importantly, understand the philosophy Buffett has applied his entire life. I remember the story Buffett tells about Mr. Market, a character Ben Graham used to illustrate the stock market. A moody neighbor who on some days is euphoric and raises prices to the sky, and on other days is in total despair and offers you great businesses for pennies. And Buffett adds one line I'll never forget: "You're not obligated to listen to Mr. Market. His job is to shout prices. Your job is to decide whether they make sense." That one sentence, if you truly absorb it, can save you from dozens of investment mistakes. But when you combine that mindset with Buffett's story about the 4 types of assets that form his financial fortress, you begin to understand why he remains calm in every cycle. People panic because they don't know what they own. Buffett always knows exactly where he stands. He has cash, great businesses, real assets, stability. When others fear, he sees opportunity. When others become greedy, he steps back and observes. And this doesn't come from genius. It comes from a system built over decades. Here's something few people know. Buffett isn't afraid of market crashes. He is afraid of the market rising too fast. He once shut down an entire investment partnership because things became so irrational that I simply couldn't understand them anymore. Imagine that period, late 1960s, the go-go years, when companies with nothing but a dream could double on the first day of trading. Buffett stood alone and said, "I won't play a game I don't understand." That instinct to walk away from excitement is something he cultivated his whole life. But can you do that in today's world? When everyone brags about accounts doubling, when social media only needs one to the moon post to pull millions into speculation, when everyone feels they're missing something, that's when Buffett warns about an emotion more dangerous than fear: envy. Envy kills, he says. It kills not just wealth, but logic. When you see others get rich fast, you forget they're playing a different game. They're gambling, but you think they're investing. That confusion destroys fortunes. But when you return to Buffett's fundamentals, you begin to see the right path. He says, investing means owning a piece of a business. It sounds simple, but ask yourself, how many people today actually invest like business owners? Or do they just chase tickers because they're hot? If you owned a convenience store, you wouldn't sell it just because sales dipped this month. If you owned good land, you wouldn't dump it just because someone shouted a lower price. But in the stock market, people do this every single day. Because they forget a stock isn't a chart. It's a business. And once you change the way you see it, you change the way you invest. A good investor doesn't chase stories. They look for intrinsic value. Buffett describes it clearly. Value a business as if you were buying the entire company. You don't need perfect precision. You just need to know whether the market is offering you a bargain or a loss. But in an overvalued market, like today, you often see the opposite: stocks priced far above reality. The margin of safety disappears. And when there's no margin of safety, you aren't investing anymore. You're gambling. You're hoping someone else will pay an even crazier price than you. Buffett hates hope. He prefers probability. And that's when you must understand the role of patience. Buffett says, the market is a mechanism that transfers wealth from the impatient to the patient. He doesn't try to catch tops or bottoms, he simply waits for value to show up. Waits for wonderful businesses to return to reasonable prices. That's when he buys, not because he's smarter, but because he waits longer. But in an expensive market, when everything is overpriced, what should you do? Buffett's answer surprises many people. Doing nothing is a perfectly rational strategy. You don't have to swing at every pitch. Just because the market is open doesn't mean you must act. Buffett once sat still for years, buying nothing, only reading, studying, and waiting. He didn't see inactivity as failure, he saw it as preparation. And while waiting, he invested in the most important thing, himself. Buffett always says, the best investment you can make is in your own earning power. He once spent $100 on a Dale Carnegie speaking course, one he later said was the highest return investment of his life. Because when you become smarter, calmer, more capable, every financial decision you make in the future becomes better. That's why in an overpriced market, you can invest in yourself first. Read more, learn more, expand your circle of competence. Buffett keeps his circle of competence very clear. He understands farming, railroads, insurance, consumer goods, traditional banking. But he stayed away from industries he couldn't value, like technology for many years. Not because he disliked technology, but because he couldn't confidently estimate its value 20 years ahead. Your circle of competence isn't meant to limit you. It's meant to protect you from illusions disguised as opportunities. In an overpriced market, that circle becomes your anchor. I once asked an old investor, where do opportunities hide in an expensive market? He said, in the places no one looks. Buffett calls these honest hamburgers, companies that are boring, unfashionable, not hyped. But they're priced reasonably because no one cares about them. In hot markets, no one wants slow, steady businesses. But those are the exact places Buffett finds value. And when it comes to management, Buffett treats leadership quality as essential. You want executives who are honest, capable, candid, people who admit mistakes. People who treat capital like owners, not like gamblers. In overvalued markets, management quality matters even more because one small mistake could send an overpriced stock crashing. But there's another thing Buffett values just as much: cash. People call cash trash, but Buffett calls cash oxygen. When you have a lot of oxygen, you're not afraid of diving deeper. When you have a lot of cash, you're not afraid of downturns. And most importantly, cash is optionality. It allows you to act when opportunity appears. It saves you from being forced to sell when markets fall. It allows you to outlast those who run out of oxygen first. Buffett builds cash not out of fear, but because he knows markets always have discounts, and he wants to be ready. But even if you have all of those, great businesses, cash, bonds, real assets, there is still one final battle, the battle with yourself. Buffett says the thing he's most proud of isn't the money or the fame. It's that he survived every crash without self-destruction. In each crisis, investors don't lose because of the market. They lose because of fear. And in overvalued markets, they lose because of greed. Those two emotions are the sharpest blades that cut through every strategy. If you understand Buffett's philosophy, from circle of competence, intrinsic value, margin of safety, to the four-asset fortress and the power of patience, you'll realize the most important truth. You don't need to beat the market every day. You just need to survive longer, stay calmer, and prepare better. Look at Buffett near the end of his life, living in the same house since 1958, drinking cherry Coke, eating hamburgers. Wealth hasn't changed him. He knows money is just a scoreboard, not the meaning of life. And when the market becomes irrational, his reminder becomes even truer. Don't let the pursuit of wealth make you lose the things that matter more. Investing is the longest game you will ever play. It doesn't belong to the fastest. It belongs to the strongest, the one who knows what they're doing, the one who knows when to say no, the one who knows how to wait, the one who keeps cash, the one who chooses businesses wisely, the one who finds margin of safety, the one who resists FOMO, the one who stands aside when the crowd goes insane, and the one who understands that to be a good investor, you must first be a calm human being. That's why Buffett became a legend, and that's the only path to true financial freedom.